My dear CA intermediate students, now in this lecture, let us discuss about the RTP question in overheads. We have discussed about material and labor in our previous sessions. Now let us discuss about overheads. While talking about overheads, one thing should come to your mind that it speaks about the indirect cost. What are they? Indirect material, indirect labor, and indirect expenses. Three more keywords in overheads: allocation, apportionment, and absorption. Three keywords. And this chapters covers about the primary distribution and secondary distribution of overheads. Say primary distribution and secondary distribution of overheads between production department and service department. So production department, while doing the primary distribution as well as service department, you have to find a suitable basis. We have done in our regular classes. Suitable basis for allocation of these overhead indirect expenses to the production and service departments. Is it not? Say indirect wages apportioned on the basis of direct wages. You have to keep it in mind. And the secondary distribution, that is service department or service departments expenses are reapportioned to production departments. Either direct method by using direct method or using stepladder method or by using reciprocal method. In reciprocal method, we learned about the simultaneous equation and repeated distribution method. Stepladder method, please remember, one service department will serve other and other will not do service to other service department. So if A and B is there, A will do service to B and B will not do service to A. The cost allocation will not happen. Stepladder method. So you should be very clear with these concepts. And overhead rate. Suppose if a single rate is applied across all department, it is a blanket overhead rate. Is it not? So these points, overhead rates are calculated by using the different methods like direct labor hours or machine hours or direct labor cost, material cost, prime cost, number of units. So we find out the overhead rates. And also we have learned about in this lesson about the under absorption and over absorption of overheads. So how do we treat these? The under-absorbed overheads are allocated or by using a supplementary rate, by finding a supplementary rate. And after finding the supplementary rate, in cost of sales, finished goods and work in progress, we will distribute these costs. Is it not? So very important. So what will be the effect on the profit also should be looked into. And another important area is the calculation of machine hour rate. Very, very important. So these are all the chapters, these are all the main points to be looked into while learning overhead costing. Is it not? Now let us go through the question and quickly move on. Nice. SC Limited manufactures two products named A and B. Okay. And the company had budgeted factory overhead 36,72,000 and direct labor hours is 1,80,000. So we can find out the predetermined overhead. How? 36,72,000 divided by 1,80,000. So this is the predetermined overhead rate. So before entering into further part of the question, we can arrive. So this is what it should strike in your mind while reading the question. Clear, students? Great. Now, the predetermined overhead recovery rate for the product costing purposes are given below. Now, the department-wise data are given below. The predetermined rate is what the company uses. Now, department P, the budgeted overheads 25,92,000. The budgeted hours are 90,000 hours, and the rate is already given, calculated and given. So this divided by this is what this rate is, and department Q this one by this 12. So total overheads also given department wise. One is a predetermined overhead rate, another one is a department wise rate. Now let us go through the additional information which is given in the question and what we need to calculate. The additional information. Now department A uses, see here, department A requires 4 hours in department P and 1 hour in department Q. So product A has 4P and 1Q, and product B has 1Q and 4P. 4P. Sorry, 1. Product B has 1P and 4Q. 4Q. This is how 1P and 4Q. This is how product A and product B. So 1 unit of product A requires 4 hours in department P and 1 hour in department Q. Product B requires 1 hour in department P and 4 hours in department Q. This is what the first thing to be noted. Now, the first year of operations, companies in the first year of operation, there were no WIP at the end of the year. However, closing units, they have given 1,800 and 5,400 units of product A and product B were on hand at the end of the year. Now, the budgeted activity has been attained by the company. You are required to calculate the production and sales quantities of both the products A and B. For that, we have one detail. What is that? Which is the closing stock details. So if production we have arrived, sales is easy. If sales we have arrived, production is easy. Clear? Now for producing one product of A and B, they have given number of hours to be used in each department. So from there, so production is easily calculatable, and then from there you can go to sales. See, while reading itself, these things should come to your mind, students. Great. Now, ascertain the effect of predetermined overhead rate instead of department overhead rate on the company's income due to its effect on stock value. So, what will be the impact on the stock value while using the predetermined rate or department-wise rate? Now, the last element is calculate the difference in the selling price due to the use of predetermined overhead rate instead of department-wise. Assume that the direct cost, material and labor together, A and B are 25 and 40, and the selling price is fixed by adding 40% over and above these costs. So, over and above these costs, 40% is your selling price to cover profit and selling and administration overhead, to include profit and selling and administration overhead. This is what. Now, my dear students, let us go through the answers very quickly. Yeah. Now, see here. Now, the computation of production and sales quantities. Now, from here it is very clear. See, now, as I already written, 4 hours of department P and 1 hour of department P in A and B. So, total 90,000 hours. So, we have found an equation 4x plus 90,000 and also x plus 4y, 90,000. So solve the above, we get x is equal to 18,000 and y is equal to 18,000. So what you have to do is that you multiply any one equation by 4. Multiply by 4. Then the solving of equation will be easy. So if you multiply this one by 4, solving will be very easy. So you solve it, we will get the answer x and y as 18,000 and 18,000. This is the number of production units which have been made in A and B. Now production quantity is arrived, closing stock is already available. So the balancing figure is your sales quantity. Am I clear? Great going, students. Now let us see what is the effect of using predetermined overhead rate on the company's profit. Now see here, when I use a predetermined overhead rate, please remember, when I use a predetermined overhead rate, what is that? I have already found out this rate. What is that? 36 lakh 72,000 divided by 1,80,000 hours. So this is the rate. So closing stock number of units are there. 5 hours is required. So into 20.40, 1,83,600. Why 5 hours? 4 hours in department P and 1 hour in department Q. Same way here, ulta in product B. Okay, so this overhead rate using predetermined rate is easily calculatable. Same way also department wise, because the rate is already there. So you should remember in mind that department wise this is 4 hours, this is 1 hour. So you multiply accordingly. Now how you arrive at this number 45,360? It is 2,07,360 plus 21,600, and from the arrival that is 6098. So 2,28,960 minus this 1,83,600, you will get the answer as 45,360. This is what the difference in overhead due to closing stock value, the effect on closing stock value. Same way in department B, same method of calculation. So 1,36,080 positive, and the net effect will be 90,720 positive. Why? This is the use of predetermined rate. Please keep it in mind. The use of predetermined rate has resulted in the overvaluation. So remember this. The use of predetermined rate only has resulted in the overvaluation. Predetermined rate usage. Overvaluation of the stock by 90,720. Which has actually company's income would be affected by 19,720. It would have been increased. So the profit would be affected only to the extent of overhead contained in closing stock and work in progress. In this question there is no work in progress, so only the closing stock will be affected. Clear? Great going, my dear students. Now, the using of predetermined overhead rate on the product selling price. So, see, product A and product B data are given. So, you know what is that use, this 177.80, 198. So, this one is underpriced when your department wise rate is used. If this is overpriced when department rate is used. So this is overpriced here, this is also overpriced here. The difference is one is underpriced, one is overpriced when using predetermined on the products. Clear? Now they have given the workings. The last element in the working is when material and labor are 25 rupees. This is what we have seen in the third part of the question. Now how the cost is our. So 25 plus 102. How 102 arrived? This is the way of arrival by using predetermined recovery rate. So 40% margin added with the cost. So your price is 177.80. This is a working. Very important. Now this working is only has gone up here, my dear students. Okay. So this is the working is there. Okay. Now see here, when predetermined rate is arrived, this is the selling price. When department wise recovery rate is applied, your selling price will be 213 and 163, because these are all other things are normal, which we have already done. Only thing here you should noting down the point is the already given rates you have to apply as per product A and B, the department wise number of hours used in each department P and Q for product A and product B. Clear, my dear students? Hope the concepts are clear. If any doubt, please do write to us. Thank you. Have a nice day.